perhaps with that, we'll start recording the session and we'll go ahead and get started. And thank you all so much again for taking the time to be here at the Next Normal Now. I'd like to think that at a fundamental level, we're all here because we have a set of shared beliefs. Most of us are likely in agreement about most of these things that you see here on your screen. We know that global inequality is growing, and we're experiencing and seeing the urgencies that are really manifesting around us, and the massive inequities when it comes to race, to gender, to basic human rights. None of this is new, but this pandemic has certainly brought these inequities, among others, to the forefront. Secondly, we all recognize, of course, given today's topic, that climate change is a crisis, and the consequences of not acting are frankly catastrophic. And then thirdly, we all also realize that capital is powerful, yet our existing financial systems are not working and are very capable of doing more. And so whether you are an institutional asset owner or a fund manager or a social enterprise or an activist or a student, there's a role for each of us to play in building a better, a more resilient future starting now. And so for that reason, we're so grateful that you're here with us today. My name is Sophia Sunderji, and I sit on the research team at the Global Impact Investing Network, or the GIIN. And I get to work every day on uncovering data and insights about impact investing, conducting research, and then sharing those findings to inform stakeholders about the industry, and also informing those that are looking to join. I have the absolute pleasure of being joined by my colleague and our head of impact standards and engagement at the GIIN, Leticia Emme, who will be moderating our Q&A session. And I'll turn over to her to introduce herself now.
Thank you, Sophia, and hi, everybody. We're very excited to have you all here today. I think, Sophia, you covered it all, so there's not much more for me to say, but I look forward to seeing your questions come in throughout the session and then opening up for Q&A towards the end. Thank you.
Wonderful, thanks, Leticia. And for those that have just joined, I see a few more folks trickling in. Feel free to introduce yourself in the chat and where you're from. And for any questions that you have throughout today's session, please feel free to send those directly to Nashin Nova, who is labeled as the questions lead in the chat function at the bottom of your screen. And so today we'll be chatting about a couple of different pieces. As you can see here, we'll start off with some background on what impact investing is, and also what it's not. We'll share some key trends on market activity in the impact investing industry, and also some key findings on financial performance and also impact performance. And then finally, we'll share just a couple of reflections about what's next on the horizon for this very quickly growing industry. Our goal is to really be sure that the session is whatever you want it to be. So after sharing a few insights on these, we'll turn it over to you and open up for questions and answers. And so please do feel free to send in any and all questions. We have, I know, a hugely diverse audience, and nothing is too big or too small to ask. Before diving in, I'll mention that the Global Impact Investing Network, or the GIIN, is a global champion of impact investing. And we have a decade plus of experience in really building this industry and in growing the scale and effectiveness of impact investing. We do this in a couple of different ways. Firstly, through engaging with investors, so from large insurance companies and pension funds all the way to smaller, more niche fund managers. Secondly, through guidance on impact measurement and management practices, including the creation and management of IRIS Plus, that's IRIS, and then a plus sign, which is the generally accepted system to measure and manage impact. And then finally, through our market research to inform activities and to inform investor practice. Ultimately, our vision is of a world where financial markets serve all members of society, and where finance plays really a central role in solving the many social and environmental challenges we see today. Ideally, we hope that investors integrate impact considerations into all decisions simply by default, really as the normal way of doing business. And so that's what we're driving towards. To kick us off, the universe of investing with impact is big. It's expansive and it often feels complex. And so I'd like to start off by distilling what we really mean when we use the term impact investing. Impact investments are made with the intention to generate a positive, measurable, social and environmental impact alongside a financial return. This means that impact investments can really run the spectrum and ultimately reflect an investor's objectives. They can be made into both emerging and developed markets, across asset classes, so whether it's private debt, private equity, real assets, public markets, and then they target really a wide range of financial returns, so from market rate returns all the way to below market rate returns. I'll also emphasize that impact investing is not philanthropy. Of course, there's an incredibly valuable role for philanthropy to play along with traditional development aid. And impact investing really works alongside those tools and approaches focused on using investment capital to achieve more than just financial returns. But that doesn't mean that you can't have both. And what we know based on the evidence is that impact investments can generate both financial and impact returns. The other piece that I'll mention is that impact investing is not inherently risky. And similar to non-impact investments, we see tremendous opportunity for really all kinds of risk profiles. And then finally, and this is the big one, impact investing is a strategy. It can be applied really to any investment. And what this comes down to is a deliberate choice to generate impact and then to use impact data in making decisions, which is incredibly powerful in all sorts of ways. We see significant dispersion globally in impact investments, with just under a third of investments made into North America, about 15% made into Europe, about 12% into Latin America. And for context, this is based on the GIIN's most recent impact investor survey, looking at a sample of impact investors in the industry. And then we also see, of course, a significant diversity of players in the field that themselves are making these impact investments. So asset owners and asset managers, from fund managers and nonprofits. And so think organizations like Group Capital or Nexus for Development, all the way to large pension funds and insurance companies. So think Zurich Insurance or Prudential Financial. But the reality is that that's just one part of the ecosystem, and the other types of organizations play an equally critical role. So companies and businesses with a social or environmental aim, and so social enterprises, for example, are the investees on the ground that are really creating the impact. And so these are the organizations that investors are capitalizing. Then there are activists and advocates who continue this cutting edge work and continue to push the boundaries for the values that we all believe in. And then researchers and academics who uncover important patterns and data on trends in the industry and the drivers of performance. Despite this tremendous diversity, there are four key core characteristics that make investors impact investors. The first is intentionality. And so that's a genuine interest and motivation to generate some kind of environmental or social impact, or both. This could be as a primary motivation for making an investment. So for example, an investment into an agro dealer in Rwanda, or to support affordable housing in the US. Or it could be a motivator alongside generating financial returns. Perhaps an investment into an electric vehicle company in Cambodia or Canada. Secondly, impact investors set those intentions with evidence and impact data. And so alongside the investment thesis, an impact investor will also have an impact thesis. And the impact associated with an investment needs to be actively measured, really to get at that core question of how do you know that you've generated some kind of social or environmental impact? Thirdly, managing that impact performance. So that would mean tracking progress using impact metrics, reporting on performance, and then perhaps most importantly, integrating those impact learnings into the investment process to manage performance more effectively, ultimately with the goal, of course, of increasing your impact. And the same way that one might do for financial performance. And then finally, the fourth piece here is building the field. And a big part of that is sharing learnings, informing other actors, building research, and really growing the marketplace through lessons learned on integrating impact into investment decision-making. The industry is growing and has tremendous potential to really revolutionize the way that we think about capital markets. And that's made quite clear by the GIIN's latest market sizing study, which found that the impact investing market is valued at $715 billion across 1,700 organizations, which is nearly $1 trillion. And this is just the beginning. There's a significant supply of capital that has the capacity to address some of the world's most pressing challenges, and that supply is only growing. And so let's take a look at what that means in practice. We know that the industry is growing in both depth and sophistication. And so what I'll do now is go ahead and share just a few high-level data points from the GIIN's 2020 Impact Investor Survey to help us unpack some of the trends and activities in the industry today. Impact investments are deployed across a range of asset classes, most commonly through private debt. And what we see is that though the asset classes used most commonly by investors are private debt, private equity, and real assets, we see significant assets under management actually allocated through public equity, which demonstrates the strong impact potential in both public and private markets. We also see huge diversity when it comes to organization types. Asset managers are the most common types of organizations making impact investments, accounting for about 65% of total investments in this sample. But then we also see foundations, development finance institutions, family offices, bigger banks. And then increasingly, we're seeing strong appetite amongst institutional asset owners. So think, pension funds and insurance companies. And some of the GIIN's latest work is really focused on mobilizing capital and working with these players to ensure that they are keen to invest with impact and are able to apply strategies to do so. As you can see here, we also see that impact investors are pursuing really a wide range of impact themes across sectors, with the majority of assets under management dedicated to investing in access to basic services. So for example, energy, financial services, housing, and healthcare. And then just over 2/3 of impact investors target market rate returns. And this really brings us back to the premise of impact investing, allocating capital in a way that generates both impact and financial returns. Of course, there are impact investors that may choose not to prioritize financial returns. And this is often by organizations that may have an impact-first mandate, a foundation, for example, or not-for-profit fund manager. And then we see the converse as well. And we see that reflected in the data all the time, where impact investors are often driven by both financial and impact motivations. On the impact side, impact investing is really central to their mission and part of their commitment as a responsible investor. And then on the financial side, investors are responding to client demand. And this is what clients and pensioners and beneficiaries ultimately want. And impact investments are seen as financially attractive relative to other investment opportunities. And this brings me to really the final piece that I'd like to share today. This is all good and well, but what about the performance of impact investments? And we get this question all the time. The reality is that impact investors report overwhelming satisfaction in relation to their financial and impact performance expectations. About 88% of impact investors are either meeting or exceeding their financial performance expectations, which is a pretty staggering statistic. So let me say that again, 88% either meeting or exceeding financial performance targets. And nearly every single impact investor included in this research sample feels the same about their impact performance. We see that impact investors are often balancing these different levers. So financial return, impact objectives, risk, and others, and ultimately making decisions that enable them to meet their objectives and achieve strong performance. And as many of you may know, that's much like in traditional or non-impact markets. As you can see here, the data also tells us that market rate returns can be achieved across asset classes, contingent on investment strategy and asset manager selection. In this chart here, we see the significant distribution of realized returns for investors seeking market rate returns, with the top 10th percentile and the bottom 90th percentile reflected, along with the average realized financial returns since inception across asset classes and market type. And so unsurprisingly, perhaps private equity generates the highest returns or higher returns on average than investments through debt or real assets at 18% and 16% on average. And that pattern really mirrors what we see in non-impact markets as well. But the reality is that financial performance is only part of the equation. And impact performance is really critical in understanding the holistic performance of any investment, and ultimately to assess whether we really are moving the needle on some of those significant social and environmental challenges that we're seeing and experiencing all the time. Today's convening is focused on climate action. And what's neat is that about 68% of impact investors address climate change through their impact investments. But to understand and track this, along with any other target impact, investors measure and manage their impact. Most commonly, as you can see here, using the United Nations Sustainable Development Goals, or the SDGs, which offer a set of overarching impact goals. And that's followed by IRIS and IRIS Plus, which is the generally accepted system to measure, manage, and optimize impact. I'll mention that the GIIN manages IRIS Plus, a system that really helps investors to translate their impact goals into real results. And so IRIS Plus was created in collaboration with over 1,600 stakeholders and is managed by the GIIN. And some key features of IRIS Plus include core metric sets, which help investors measure progress towards impact goals, and an evidence base, which helps inform an investment's theory of change. And this really makes it streamlined for an impact investor or another organization to measure and manage their impact. The system is used by over 10,000 organizations globally across both developed and emerging markets. And it's used by some of the largest investors in the industry, from asset managers and pension funds to development finance institutions, and across a range of other organization types too. And what this really speaks to is the growing standardization in the industry when it comes to measuring and managing impact. What's especially exciting is really the incredible impact insights that can be derived from using standardized metrics and then applying a standardized analytic process. And at the GIIN, we've most recently been focused on building out impact performance studies and a methodology called Compass to understand how do you compare investments on the basis of impact in a standardized way. And this paves the way for industry impact benchmarks and ratings and all sorts of other analytic tools and indices. And ultimately, this is really key to using capital more efficiently and really achieving more impact. And that's really what we need to advance practice in the field. I mean, transparency in impact data is critical, along with integration of impact data into decision-making. And that's why the GIIN has focused its mission to integrate impact into every decision and to really equip investors and others in the field with the tools to do exactly that. The challenges that the world is facing, climate crisis and so many others, are just too urgent for impact capital to underperform. We know investors increasingly want to align their values and the values of their stakeholders, clients, pensioners, with their capital. This industry is only growing, and there are huge sums of capital sitting on the sidelines just waiting to be unlocked. And we can each play a role in achieving that vision. And so with that, I am delighted to turn it over to my colleague, Leticia, who will open up the floor for questions. As a reminder, feel free to continue sending your questions to Nashin in the chat function, and we look forward to receiving them.
Excellent. Thank you, Sophia. Hi, everybody. Again, we've been getting a great number of questions through the chat box, so we're going to kick off with the ones we already got, but please keep them coming. The rest of the session really is just to hear your questions and discuss together. So let me go to the first one. There's a question that says, the GIIN and HIPSO recently came out with the joint indicators to standardize metrics for different causes. What does GIIN hope these metrics will do? And how does the future of IRIS metrics look like? That's a great question. So yes, the GIIN and IFC, or together with HIPSO, recently launched the joint impact indicators, which are a subset of IRIS metrics and HIPSO metrics. And they are aimed at being a very high level set of universal metrics or sector agnostic metrics that investors can use to understand how their investments are doing across three topics, which are jobs, climate, and gender. So again, these are very high level, a great entry point, and really sector agnostic. So the idea is that it doesn't matter specifically what sector or what theme you're investing in, you should be tracking these metrics related to jobs, climate, and gender across your investments. Where we see, the big difference with IRIS Plus, and the question asks, where do we see the future of IRIS Plus going? So, the GII, which is a short for joint impact indicators, are wonderful in providing this very high level understanding that you could use maybe at a portfolio level. But to really truly understand the performance of each investment, you need to go a lot deeper. You need to look at investments and the performance in context, and it's a multi-dimensional approach. So that's where IRIS Plus comes in with the core metric sets, which we have developed across a wide number of impact themes. And in terms of the future of IRIS metrics, that's a wonderful question. So IRIS Plus is focused on positive impact, and we focus also on filling gaps where there are gaps in terms of availability of metrics. So that's something that we'll continue to focus on. And the other important focus also is on having the metrics that enable the understanding of impact performance, so that investors can make decisions based on impact data, and allowing also for benchmarks and other type of analytics that are very much in need, as Sophia was saying. I hope that's helpful. Let's go to the next one. The next one is also on IRIS Plus. So how do I access IRIS Plus, and how much does it cost? Well, I'm delighted to tell you that IRIS Plus is a public good. It's absolutely free. You access by going to the website, which is iris.thegiin.org. I will put the link in a second. I just can type and put the link in the chat box at the same time. And And so you just go in and you can explore it. I would highly recommend you create an account and you sign in, which is free and it only takes 2 minutes. The reason why the system asks you to create an account is because you will go in and start creating your impact frameworks. For example, you'll say, I am interested in either SDGs 1, 3, and 4, or you can maybe say I'm interested in financial inclusion, and the system will guide you through a set of questions and then provide you with all the resources you need to track the impact of those interventions or investments. So it'll give you your core metric sets, which are these KPIs. It will give you an evidence base and whatnot. And then it will save you because you logged in with your account. So go into a website, play with it. And if you have any questions, just reach out to us. We'll be happy to help you. Another question related to KPIs says, how do you know which KPIs to use and how many KPIs should I track and for how long? So again, I would say it depends. If you're looking for something very high level that you can use in your portfolio across topics, maybe the joint impact indicators is a good place to start. If you're looking for KPIs at a thematic level, so you want to say, want to see KPIs for let's say for interventions or investments in education or in housing, then definitely the core metric sets is a place to go, which are already the KPIs that the industry agreed for each of those. In terms of how many, there's no standard answer in terms of how many. I would say, no, that's up to you. And really what we would encourage you is that you select the number of KPIs that is, realistic and doable for the investee, if you're an investor, for the investee and for you, but also the KPIs that give you the data that you need for decision making. There's no sense of just tracking data that you can't use. Sophia, there's a question for you that says, how can investors integrate impact data into the assessment of investment performance?
That's a really great question, especially since the GIIN has been doing just a tremendous amount of thinking about this recently. And you can see some of that thought process in Compass, which is the methodology that we recently released on comparing and assessing impact performance. But there are a handful of ways of how investors can really integrate impact into the assessment of an investment's performance. And thinking about the investment process, the first step is really around setting strategy and constructing a portfolio. And so there we see tremendous potential for investors to think not only about the risk and financial return, but also about the impact potential of an investment or of a set of investments. We also see tremendous potential for integrating impact after due diligence and after investment selection. So as an investor is actually managing the performance of that investment, especially since there are a couple of different levers that investors can realistically use to determine how to increase or influence the actual impact results. So thinking about things like the timing and terms of capital, the nature of stakeholder engagement, and a handful of others to really help investors and help investees influence the impact results. And then the other piece is, of course, at exit and sort of thinking about some of those exit considerations, whether it's a private debt or a private equity investment or others, and really thinking through what the impact results look like before deciding to exit an investment. I think the other thing that I can mention here is one of the pieces that the GIIN has been thinking about is really the different types of impacts that we see, and we've sort of determined 3 what we're calling analytic figures to better understand this that can be integrated across the investment process. The first is around scale, and so really looking at impact at a point in time. So in 2019, for example. And that's really useful in terms of baseline data and understanding where you start. The second is pace, and so looking at change and impact over time, and so using that baseline data compared to another set of data from a different year to understand that change in impact or the delta. And then the third piece is around impact results relative to the capital invested, and that's really to give investors a sense of the efficiency of that capital or how much impact is being achieved per dollar invested. And And I mention these because I think that these analytic figures are really quite useful in terms of integrating that kind of thinking across the investment cycle.
Excellent. Sophia, another question for you. Oh wait, I just lost my question. Here, how does the performance, how does the financial performance of impact investments compare to the performance of non-impact investments?
That's also a fantastic question. And we recently explored this in a report that the GIIN produced earlier this year. And we're happy to send that link in the chat. It's called Impact Investing Decision Making Insights on Financial Performance. And in that report, what we do is essentially synthesize all of the available resources, benchmarks, and publications on the financial performance of impact investments. And what we see is that across asset classes, private debt, private equity, and real assets, there's tremendous diversity. And really the performance varies significantly based on asset class and also based on the diverse set of objectives that impact investors pursue. Our overall finding is that market rate returns can be achieved on a risk-adjusted basis through impact investments, though of course this is contingent on asset manager selection and investment strategy. And that maps over quite well to impact agnostic investments. And so what we'll do is circulate that link, and I'd highly encourage you to take a look at some of the specifics that do offer some comparisons and also additional resources to really take a look within an asset class of how those financial returns numbers compare to other benchmarks.
Excellent. Jumping to a little bit of a different topic that somebody's asking, how do you compare your approach vis-a-vis the GSG network? How do you see the role of national advisory boards? Is there an institution that provides a widely accepted stamp for impact investing or for an investment fund? So that's a great question. And I would say, so the GIIN is a field builder, and we work together with many organizations and stakeholders around the industry to really help advance and grow the industry. So GSG is one of them that we work closely or in partnership with. I would say the main difference, GSG tends to focus more around, how the person asking the question was saying, on national advisory boards and really working with regulators and governments. Our focus at the GIIN has always been more working with impact investors. So we're both advancing the growth of the industry. We just do it from different and complementary angles. In terms of the question around stamps of approval, if you will, for boards, for investments or funds, there's a few different standards that offer that type of seal. For example, the UNDP, which are the SDG impact standards, they offer a seal for those who complete or have certain ranking on the standards. Then there's the operating principles for impact management. They don't necessarily have a seal, but it's a way to recognize which funds comply with the operating principles or not. The GIIN is also working on developing a new feature called the Iris Plus list, which will help bring transparency to the market and help see kind of who's doing what and how do different organizations and funds compare to one another in terms of their practice and their performance as well. So lots to come more in the sense of providing more transparency and allowing to see how different funds or investments differentiate. Sophia, question for you, and we can both jump in on this one, I guess, but can you please comment on the importance of additionality in impact measurement?
Yeah, absolutely. And this piece comes up a lot. And what we've been thinking most recently is really around this question of investor contribution, which we distinguish from investee contribution, and really understanding the influence that an investor has in terms of the ultimate impact results. And so some of our thinking has been around what is within the power of an investor to really influence those results. And it comes down to the capital that they're providing, but also the terms of that capital, the timing of that capital, and the way in which they're able to engage with the stakeholders. In Compass, which is the methodology that the GIIN has recently released when it comes to comparing and then assessing impact performance, we outline several different what we call normalization strategies. And that's really a way for us to translate from investee or company level impact to investor level impact, and using a mathematical adjustment process to better understand what those impact results are that are reasonably associated with the investor themselves. And so this is sort of paving the way for all sorts of really incredible comparisons. The GIIN is, as of most recently, working towards standardized impact comparisons in the form of an impact benchmark, and really driving towards some of those tools and resources that will enable investors to ultimately integrate impact into decision making. And so going back to that question that we got earlier. Anything to add from your end, Leticia?
No, I think that was pretty good. Excellent. Okay, moving to another question. It says, as someone completely new to global impact investing, what resources would you suggest I understand, not just as an investor, but as someone whose heart fully resonates with cultivating resources for impact investing? So I love that question, especially because the part about your heart fully resonating with this. There are, so I would say there's a lot of resources. The great news is that there's a lot of work that has been done already to really help simplify, whether it's IMM or comparisons of impact performance, or understanding the market and where the market, the state of the market. So a lot already has been done. You do not have to figure out yourself. At the same time, we also know that when you are new to the sector, sometimes it can be overwhelming to know where to start. And there are a wealth of resources out there. Not because I work with At-Risk Plus, but I would highly recommend At-Risk Plus because it really brings together, At-Risk Plus is built as framework agnostic, if you will, and it's built in alignment with 50 different frameworks, principles, and initiatives. So already with whether it's the IMP 5 dimensions, the SDGs, and HIPSO, and 2X challenge, and you name it. And it really focuses on, okay, how do I do this? One thing that we find quite a bit as being common is that investors and different stakeholders really embrace and resonate with common goals such as the SDGs or principles and standards that exist out there. But then when it comes to, okay, how do I bring this into my practice, is where sometimes they need a little help. And that's exactly what At-Risk Plus is built to help with, is how do I bring this into my investment, into my portfolio, into my practice. So I would definitely start there. If you want to understand state of practice, I would say, there's a lot of, our research reports have done wonderful in helping, provide some clarity around whether it's the size of the market or, different differences by geographies, a lot of what Sophia was sharing today. And then our newly launched Compass in terms of understanding, what's the methodology to help, standardize and compare the performance of investments. But maybe, start with baby steps, start there, and then feel free to email us if you want more, and we can always direct you to other resources. Sophia, is there another resource that you have?
No, I think you covered it. I love that you mentioned the SDGs, which I think are maybe just so incredibly common, and folks love the fact that it's sort of this tangible, colorful square that you can put on your screen. But what's pretty incredible about At-Risk Plus is that you have the option to select the SDGs that you're targeting or looking to align with, and then from there, to Leticia's point, really get into the granular, okay, how do I actually implement, which is really, really neat.
And actually, somebody just asks, under the SDGs, how do I break down KPIs? So what I would say is exactly as Sophia just said, if you go to At-Risk Plus, you can start by selecting your SDGs. And then when it will first ask you about SDGs, but the SDGs are very broad, right? So if you can select SDG 1, which is no poverty, there are many different ways in which you can be addressing no poverty. You could be doing it from an agricultural point of view, from a housing point of view, from an education, or from a financial inclusion point of view. So the system will ask you a few more questions to kind of tailor the answer that it will provide you, but it will give you the core metric sets, which are your KPIs for that. So that's something that I would definitely look at. Next question says, how do auditors of impact reporting approach their audits, especially if non-public data is being used to assess and report impact? Sophia, do you want to take that? And then I'm happy to join as well.
Sure, I'm happy to, and this is actually something that we've looked into to a certain extent in the impact measurement and management report that Leticia had referenced. And what we're really finding is that as the rigor of impact measurement and management practice across the industry has strengthened, the demand for that external validation of impact performance to really hold the impact investing industry accountable has too. And so what we find in the research is that about a third of respondents to that particular study have hired an external consultant specifically for the purpose of verifying impact performance results. And what we also see is that nearly 30% identified third-party audit and validation of impact data and performance is very important. There are also a handful of really useful industry-wide frameworks that have emerged. Of course, most folks are probably familiar with the IFC's operating principles for impact management, often referred to as the open disclosures. And there's a certain principle in there, I think it's Article 9, that really talks about impact verification. And so we definitely are seeing that trend or that movement towards it. But then we also see, of course, the UNDP's Sustainable Development Goal or SDG impact practice standards, and that's for private equity funds. So I think they're expanding that as well. There's CERES and SPI Thor, and that's specific, I believe, to financial inclusion, though Leticia, feel free to hop on there. Another one is, I think, True Cost for ESG analysis, which really looks at assessing risk. And then, of course, you've got a handful of some of those larger global accounting firms, such as EY, that are providing ESG audits, but increasingly as well, impact investing advisory and assurance services to both asset managers and asset owners.
Excellent. And then the other thing I would add to that too, I think the question was saying, how do auditors approach this, especially if they're using non-public data? Well, the auditors typically, so at least the way it works in the sector right now, a company or an investor decides they want an audit on their fund or their organization, and they will partner with the auditor or the assessor to conduct that audit. So they will give access, for example, the way, I think EY or Bluemark, which is launched by Thailand Work, they will partner with the organization in question to look at all their materials, resources, processes, and based on that create a report. So it's not done by any means just with publicly available data, but in partnership with the organization. These are not audits that are being done without the permission of the organization. Excellent. Okay, let's move on to our next question. These are all wonderful questions. Please keep them coming. We have about 10 more minutes, maybe a little for that. So definitely keep them coming. Sophia, what are some of the, wait, that was my question? Oh, sorry, find it. What do you see as some of the most important opportunities for the sector going forward?
That's a great one, Leticia. And I think there are a huge handful, a couple of pieces that we've already touched on. Of course, what makes impact investing so unique is the fact that it is focused on impact alongside that piece around financial return. And I think there's tremendous potential to really leverage impact data when it comes to decision making. There's been, in my mind, such a big focus over the past 5 or 6 years as we've seen, additional measurement tools emerge on that piece around measuring impact. And that is critically important to understanding the impact performance of an investment. But what's equally important, if not more, is then taking those results and taking that impact data and actually using it to help inform decision making. And so I think that's sort of the next horizon, and perhaps one of the most incredible opportunities that we're seeing in the industry. And what's neat is that there's tremendous opportunity to fill some of the infrastructure gaps in the market. The GIIN is doing some work on this. Other organizations and field builders and network organizations are also doing work on this. But if we can build a system and tools and resources where investors can actually make decisions based on impact, and that's what we're driving towards, that really does have the potential to change the way that we allocate capital. So that's an incredible opportunity. And then maybe I'll add in one other quick one. But the other piece that we've been, I think, thinking about a lot is just the tremendous sums of capital that sit in large institutions. So some of those institutional asset owners, like pension funds and insurance companies and endowments and religious institutions, that have potential to generate impact. And what we see, I think, every single day is more and more of institutional asset owner type investors recognizing the value of this, and no longer are they asking, well, should I integrate impact into my portfolio? It's really a question of can I? Does my fiduciary duty allow it? And then if so, how? And so I think that's the other sort of big opportunity that we see in the industry in terms of mobilizing capital.
Wonderful. Thank you, Sophia.
Yeah.
There was another question that says, that there's, with accusations of greenwashing often being the case for, ESG strategies, do we have a similar take on accusations on impact washing? And I think, Sophia mentioned some of the stats. Definitely, that is a risk or a challenge that people see in the industry. I think, on our end, this is why we see both, impact measurement and management, really at the heart of it, because that's what helps, reduce the chance of impact washing, but also increase transparency and being more transparent about, who's doing what, how you're doing it. Really will also help combat that risk. And so this is why we're working on this. I mentioned this new feature called the IRIS Plus list, which really is to help bring transparency and help investors disclose as much or as little information as they want, but really kind of putting the ball a little bit on their court and helping, bring it all into one place to really help, provide more transparency and help see kind of like who's doing what, how you're doing it, to Sophia's point. It's not just, okay, I agree, I need to do this, but like really how you're doing it, and through your practice also understand a little bit more what they're doing, and then help differentiate and fight the risk of impact washing that way. Sophia, what do you see as the growth expectations for the industry?
That's a good question, and it's interesting because in some of the findings and insights that I shared earlier, we talked a lot about just the fact that this industry is growing so quickly, and we've seen that over the past 5, 6, 10 years. Based on results from the annual Impact Investor Survey from 2020, what we see is that the compound annual growth rate, or the CAGR, is about 17% in impact capital per annum, and that's among a group of repeat respondents. But really, it's quite incredible growth. And if we break that down by geographic region, what we see is that Western, Northern, and Southern Europe is probably the fastest growing region at about a 25% growth rate, followed by Southeast Asia at about 23%. And then if we also break that down by sector, what we see is that WASH sits at 35%, and financial services at 30%. And so those are probably the two quickest growing sectors. And finally, I'll mention that historically, we've seen just a tremendous amount of impact investing activity in private markets. But as I had mentioned earlier, we're seeing growing interest in public markets as well, both public equity and public debt. And what we found is that public equity in particular was perhaps the fastest growing asset class in impact investing over the last 4 years.
And thank you, Sophia. We are close to time, so we did our best to answer all of your questions. We got some really very insightful and wonderful questions. Thank you very much for sharing these questions with us. If there's any that we didn't get to you, we apologize in advance, but feel free to contact us after and we'll try to answer all your questions. So with that, back to you, Sophia.
Wonderful. Well, just to echo Leticia's sentiments, thank you so much again for joining us and for recognizing this need to really drive systemic change and transform capitalism in a way that works for all. And your critical and really thoughtful questions were just fantastic. And so we appreciate you being here. Our next session for this convening on climate action is a fireside chat with Cardinal Turkson. And so we highly encourage you to join. He'll be sitting alongside Amit Puri, who is our CEO at the GIIN. And so we invite you to please go ahead and rejoin the main webinar. To do so, you'll just need your unique access link, which is provided in your registration email. And so go ahead and click on that. And we look forward to seeing you back in the main session.